All right, good peoples, good evening, good Sunday evening your time, my Monday morning. Um I'm putting out something that I wanted to cover. Excuse me. I see it as an opportunity and I love to bring you guys opportunity. People always ask me what my portfolio is, but like I said, it's very complex. I have an awful lot of positions. I think it would serve to confuse people more than it would help. So I'd rather just tell you when I'm considering and moving into something. So, given the geopolitical situation, given a long bull flag in oil, I feel like the fundamentals, the technicals, the situation are dictating that oil is very likely to rise over the next weeks, months, and possibly multi years. So, what does that mean? That means that's an opportunity. The public won't really sense or see this unless it explodes, $20, which could happen with a blockade of, in the Red Sea and some of that tensions. But mine isn't just about the war cycle and the tensions right now in the Middle East with Iran. It's just collectively we're entering and already are in a commodity super cycle. So I think you guys know that. I'm also sensing an ending coming to what we've seen where the Mag 7 just, dominates the S&P 500 and just goes up and up and up. So I think as that comes to an end and there's tension and pressure in the averages and indexes to come down. I think that gold, hopefully Bitcoin, is not always showing me that store of wealth, that stability right now. Gold is more showing it, but neither are doing terrific in this latest tension, but both have moved a lot. And I expect that more than likely to continue, but I'm not sure that on the technical side that the indexes can continue higher. I have to watch, right? I'm never going to say this is absolutely what's going to happen. I reevaluate, I give you probabilities. So, given that, I get asked all the time, what kind of oil opportunity, what kind of energy opportunities are there for income weekly, monthly? Because for the longest time, I didn't play the income game. If you ask me how I retired early, and I did it in the decade of the 2000s, was because of the dot com. I tell this story, but for somebody new, the dot com bust. So I was in high tech. I'd been in high tech my entire career in engineering positions early on and to sales support roles, then into marketing, then into business development, then into pure sales, back to business development, rose through the ranks to a senior levels in management and worked for a big tech company. So that, and then when the dot com bust happened, I had acquired a lot of options, a lot of stock in the tech company, in the big tech company, not the dot coms necessarily. But when that NASDAQ bubble burst and we went down 86% in the ensuing time, I could see right away that my retirement that I thought was imminent wasn't imminent at all. And how was I going to work for another 10 years, which I didn't long for? Sometimes you don't love your work, you're just so richly rewarded that it's all consuming and you just do it. It's sort of a means to an end. I know a lot of you can identify with that currently in the US. It's a great opportunity, but it's a very stressful presence. Um, so, having said that, I really studied and said, okay, given this NASDAQ, where is the opportunity to make? I want to do all this in 5 or 8 years and retire and go abroad. I didn't have a family, I didn't have my own children. And so it was like, I can go live somewhere cheaper and yet I can retire. And I would tell some of my friends, toward the end, yeah, I've got a few million in my account now. I took 300,000 in 7 or 8 years and made it 2+ million. And oh, well, that's not enough to live. Well, in hindsight, that's been more than enough to live because I continue to use some of that investing in my, once I move out of first world. And this isn't for everybody. If you got a lot of grandkids, you got all your family, it's not for everybody. But I can't tell you how many, if I chose to do a channel on living in Asia, I would have 10 times the amount of subscribers and income. But it's not, I have a love of investing and I have a love of all the things that allowed me to retire. So that's why I don't do that. But honestly, if it was purely for the money, that's exactly what I could do: 30,000, 50,000, 100,000 subscribers in a few years. Whereas here, I work a lot harder for that, but it's a labor of love, something I enjoy. All right. So getting into this, what is the opportunity? So I'm going to walk you through my rationale and an opportunity to be in commodities and get income if you want to get income in different ways to do that. So for non-income folks, probably just going out buying an option on USO or say Exxon Mobil. I would give myself, anytime I buy options, I give myself runway. I'd probably go out to December. And then if the USO just flies up and Iran blocks a strait and something happens and oil goes to 90 to 100 in 3 weeks, 5 weeks, then you may want to cash that out. Okay. But the fundamentals and the technicals tell me what is the story, positive or negative, and the technicals tell me when to buy, right? So I use multiple things. So I'm going to go into charts. I'm going to go in and show you some stuff. And before you guys scream at me about defiance, and listen, I'm aware of URAX, right? This scenario I'm going to run you through is on Usoy. So Usoy is doing okay. And I'm going to tell you all the details. Look, I'd be the first to tell you Defiance has suffered a lot in NAV erosion on their indexes and, all of those kinds of things. But guess what? So is Yieldmax, right? It's not as obvious on the index ones. But Max, since it pays so much, has really had NAV erosion on a lot of things. And they're working on it like all firms. So let's jump in here on Usoy and let me tell you a little story about it. So it's a rather simple fund. It's based on writing weekly, even though it pays monthly. They sell puts, which is one of the strategies. You can buy calls and sell puts. Well, from what I can see here, they simply, and reading, they just simply sell puts. And they do that kind of on a weekly basis. And oil, by its very nature, and this ties back to commodity orientation of oil, they're midweek, right? This has an expiration of 6/25/25, right? So it's like Wednesday. Well, that's because oil, the oil futures market. So they've sold an 82 put. What did I do? I went out, you can do it, go to Defiance and download holding. So this is the holdings from last Friday at the close of business. Now, they probably don't tell you, like I can extract at Yieldmax, what they paid every single day. They just give you a new holdings look. Okay. But I went through and did some forensic work and enough to be able to share with you guys what I think about this opportunity and what it's likely to do. So, what's important is let's go through this. So I've got so much data here. I want to think through how I present it to you. All right. So the fund, this is important, has outstanding shares of 3,775,000. So you guys know from my estimates, from other YouTubers and things, that once you figure out what they're going to earn through their option writing, okay, and closeouts, then you look at the share price and then you calculate that. Well, what I did was I looked, and this is crazy, right? The market's going to open today. Oil's likely going to be up with this latest tension and this fear, right? With the U.S. entering in, and if you notice, a lot of these things are done on the weekends on purpose. They don't want to rattle the markets during the middle of the day, so they do something on a weekend. Um, Not always, but most of the time. So you see the current the current USO, if you go out and look at the price, it's like 83.16 or something that the USO index closed at. Well, when they sell an 82 put, they want to be above that, right? If you drop below 82, then they're going to cause you to buy it back. I mean, they're in the flex market here in the first place because of volume. They have 5,150 contracts, right? So they're out playing in the flex. If you go out and look at USO options on the 82 put for this, they only show 365 active in the retail market. So they're playing in the flex market. So they have to buy it back. I was about to say you're going to get it put to you because that's what happens to you and I in retail. So I calculated the net worth of this, and it's very likely that this is going to rise with the fear. And so USO is going to be 84, 85. And if I had to, do an educated guess, there's almost no way that USO is below 82. So they're going to buy this back on Wednesday for a couple pennies, right? Especially if it's 84, 85, they'll be able to buy it really cheap. But look at what's the bid and ask as of Friday close? With it being 83 something and the put being 82 with 3 trading days, right? Monday, Tuesday, Wednesday, it has $1.56 by $1.86 bid and ask. Now, granted, that's in retail, but it's not going to be radically different in where they're playing, okay, in the flex marketplace. And you have to cash settle. Whereas you and I, if it's 84, 85 and we sold an 82 put, we can set on it, let it expire worthless, and we collect all the money. Well, part of their world is choosing what's called European options. It's just a type of option, not a geographic destination of the option. And therefore, they have to buy it back. There is no, getting it put to you. You do not get assigned with European options. You simply cash settle. So they'll go out and buy it for 2 or 3 cents. So sorry to belabor on that, but I find most people don't really understand it, and they barely know options. And then if they know options, they know options in the retail world. So I want to educate you because I had all these questions and did all the research to figure all this out. All right. So I don't know what they sold it for, but if they're weekly and they did it a week ago, but now I'm going to start tracking this, but still, let's say they sold it for $2. I mean, it's ironic that a week later and it's moved up. You can just look at a chart, which I'm going to show you some chart. So they stand, if they're able to buy it back for a couple of pennies, they stand to make 27 cents a share, which is 1,030,000, right, divided by 3,775,000 shares. So that says for that week sold put, they made 27 cents. Well, there's like this pays monthly, and I don't think it's involved in the 13 month. I think it's just 12 months, but I'm not exactly. I could go out and look at their schedule. But either way, I said, but what if they sold it higher? What if they got 235, which I would think they would have? Then they would make 32 cents a share. So what I try and do is go out and estimate that. What's 4 times 27? It's $1.08. What's 4 times 32? It's $1.28. So if they win this, and it depends on did they win all 3 of the previous weeks, and did they get a pretty good price? So you can see what dictates how this fund behaves. So I'm going to tell you the positive, I'm going to tell you the negatives. All right. Here's the last, I don't know, 13, 14. I didn't do a count on these. 1, 2, 3, let's see, 3, 6, 9, 12, 14. So the fund launched back in May, I believe. Do I actually have the fund? Yeah, in June. Well, I went back a year, so it could have been toward the end of May. But the whole point is, let me give you the stats and the numbers here because it's kind of relevant to see if this is a good investment. Well, let's look at the underlying. So here's what if you're in Misty, your underlying is MSTR. If you're in Usoy, your underlying is USO. So here's a USO chart going back 4 or 5 years. What do you notice here? You've got a flagpole with a waving. The longer this goes, the higher it breaks, either down or up. But the odds favor an up breakout. But we've tested around 82, 1, 2, 3, 4 times. And one of my technical mentors says to me, it's like knocking on the door. You want to break a door down, you throw your shoulder into it. You do it once, you do it twice. What's the probability? It weakens, the resistance weakens, right? You hit it enough time, and depending on your strength and weight and size, you're going to crash through the door. So that's the 1, 2, 3, 4. This is the fifth time, and we're right up here and likely to break out. Now, could this be something that breaks out geopolitical tensions, that it calms itself? I don't think so, guys. I think there are more hot spots. I think there's more pressures. This is the significance of this bull flag. So I also have some people doing Fibonacci work that say we should see a minimum of $90 in oil price. Okay. And maybe we're destined for 100 and 120, and it could be a 6-month spike. So I'm looking at that, looking at the odds and trying to sense it. What's the current IV here? Well, it's 60.4 for USO. And so when I drug these, it made the 52 go to 53. So apologize for that. All these are 52s, guys. The little nuance. Whenever I see raw data and I input it from somewhere and I see those anomalies, I know the person creating the CSV or Excel file just drug down a column and it ends up with 000, and then the next one is 0001, right? When they don't mean for it to have the one. All right, so that weekly average, a 52-week average, is only 31.4. So we're at high volatility because of this, which verifies what I'm saying, which increases the pay, guys. They're going to be able to write these puts in a very high premium environment because of the IV. The 52-week high is 66.4. So, it's 90% there. And the 52-week low is, I copied it, I drug something. Let me get it for you. I think it's like 20, if I'm remembering. It is 17.8, guys. Okay. So that's what happens on these things. Now, let's go back and look. This was record date. And all you really need is declaration, XDiv, and pay date. Is this pay date? I have to go look. Oh yeah, it is. Okay. What happens is some column I want for one thing, another column I want for something else, trying to get it all to line up to get as much data as I can, guys, to tell the story. So you can kind of see this is the first payment when they're getting started. They pay 77 cents, 54, 80, 71, a dollar one, 79, 87, 78. So you can see, you can almost get a sense. This is winning like 30 cents a week. This is maybe they had 3 wins and a loss, right? This is winning 25 cents a week, more than likely. So this thing is paying. Well, how does it work out on NAV? Well, guys, it's ugly. But guess what? It's better than Xomo. I got that for you next. So this thing launched on 8/31, if I recall. Again, I'm mixing up the two funds. Where do I have launch date on this? Anyway, you can go look. It's not much more than right over here in June of. I didn't want to make this a multi-year chart because I make a 2-year chart. Almost all the other columns to the left are no data, right? So let me do something though, so you guys, so I can give you the actual data. Because I hate that when I don't have exactly what I want. Let me do max. Okay, so the launch date for Usoy was May 10th, 2024. Okay, so at least you know that. So a little over a year. And what has happened? Now, you could call this starting to stabilize, and then it didn't. This is always a function of what the underlying is doing. And what I always say to you guys, why do you think I'm bringing in this opportunity? Because I see this as a favorable for oil prices to rise more than just a week or two around geopolitical tensions. I see this as the tensions have magnified, they're going to get greater. We've had this period of the bull flag for 3 or 4 years. It's ready to go. Okay. Watch it closely, but I know what I plan to do, and I'll describe that for you. If you wait too long, this will already be $12, $13. Okay. And then you're going to go, God, I wish I got into 10. But my point is, why not collect income if you want income and be in a rising environment over here where high premiums are going to make more income? So you're buying something for 10, what was it, 1037 was the closing price. Guys, I do it on different things on where don't I have that here for you guys? Well, let's put it right in here. Yeah, 1036. Okay, guys. So it is 1036, and in my opinion, I know it's not USO, guys. That is Usoy. Current. Okay. So to me, this is an opportunity. I mean, you're looking at 60 to 80 for multi years with some attempts to break out. Not many attempts to go lower. This was a very temporary. Um, and the volume, right? Volume typically precedes price. Sometimes you get high volume and the price just takes off. Well, clearly it's kind of moved up, but the last couple of days here are telling you that this is getting serious. All right. So before I go to Xomo, it wouldn't have been fair. As I was building this, I intended to just do Usoy. So for me and you guys that want income and only really want to do the income game, go buy something that I'm bullish on that fits a scenario and buy this thing now. You'll get paid shortly, right? When are the declaration dates? 628. So I imagine it will be this week. Now, I'd have to go to the site and find it, but it's within 3 or 4 or 5 days, guys. It's either this week or the following Monday. But I don't think it's the following Monday because now you're talking, yeah, it's the 30th. That's possible. But again, it's on the website. I can't cover every single thing. I have a lot of time in this as is, but it's valuable to tell you that. Okay. So I think this is stabilized and I think this is about to break out. All right. So let's look at least at Xomo and I'll tell you the story there. Now, oh wait, there's one more thing. So if you bought Usoy and you held it for this period of time, where did my data go, guys? Oh, it's right here. It's so small. Okay. Nav erosion. Yeah, I knew I had this. Nav erosion from 20 to current 1036. So over this 13, 14 month period, like 13 month, what did I tell you? It launched on 5/24. We're like 6/23. So 13 months, it is gone down. 20 minus 1036 is like 964. So it has lost, let me make this bigger. So it's lost $9.64, guys. But how much is it paid out? Well, it's paid out more than that. It's paid out 1080. So I'm not saying these are not things that I want to tell you to do. If you were in this fund and it started dropping, I would have said get out. Now, uranium is running and Defiance closed UREX, which was a 2X. This is not a 2X, guys. And uranium, just everybody thought uranium was cheap and they were buying it in December of last year in January, and it went down another 3 months. Now it's running and it should continue over multiple years here. Again, depends on how fast it goes up. Will it retrace again? Yeah, ultimately. So I'm bullish on uranium if you're in that, and I'm bullish on oil now. So this fund, to me, at least you didn't lose. You never would have bought it higher than 20, okay? Although I think did it go up a little bit? Yeah, a hair over there maybe, but $20, and now it's 1036. Um, so you've lost 964, but if you've been in since the beginning, you've been paid 1080. So if you bought it up in one of these scenarios, you probably bought it cheaper. You bought it around $10 and you're ahead of the game. So that's what I'm offering you now is an opportunity to make $1 or more over some months for a $10 or $11. Think Ulti, right? You're not getting $1 in Ulti, but you're only paying $6 for it. So this to me represents a terrific opportunity, guys. All right, let's finalize on Xomo. So here's the current data. One of my problems with Xomo is the NAV erosion is even greater in Yieldmax. Okay, so in the 22 months that it's paid out, it's paid $6.72. Call it 73 if you round it. What's the NAV loss during that period of time? 6.81. What did I just show you in Usoy? You were ahead of the game in 13 months. This is 22 months and you're behind the game. Look at this. So Xom, when it launched on 8/31/23, the Yieldmax fund. The underlying was 111.19 on launch date. It's now 114.70. Do you represent that? No, you went from $20, okay, to 13 something. So here are the two charts. Here's Xom, right? What does Xom remind you of? ExxonMobil. Do you see that bull flag? Same bull flag that USO has. This is one of the largest oil companies in the world. Them, Chevron, or in my opinion, or Occidental Petroleum. I mean, there's some niche guys. I'm Devon Energy right now, DVN. I'm very bullish on that underlying. So again, growth guys, different things. These pay a dividend, but they're small dividends, guys, 2, 3, 4%. Now, I've mentioned before, I was in PBR, the Brazil state-owned oil company. I got as high as 49% distributions in a year while gaining some growth, some NAV gain. But I was happy with flat to slight gains and getting 30 or 40. But that 49 disappeared back to 20 because they were selling off some assets and paying us additional dividends beyond what they were just making. But it's still a great dividend yield stock. Excuse me. So here's Xomo. Forget the little spike probably on that first day. I just called it $20 because that's kind of what they all launch at. I didn't even pick the close, but you see it now. It's in the low 13s. All right. What is Xomo right now? 13.19, which is where I got my math up here. for the fact that you lost 681. I mean, your NAV loss, right? You add that to 13.19 and you're back to $20. So you decide, guys, what you want to go do. If it's me, now I think ExxonMobil will do well. So you guys that don't want to play this, go out and buy some calls in December. Give yourself some runway. And if it spikes in a month or two, then sell them and you're ahead of the game. But don't go out and buy 30-day, options, because the premium is probably too high with the unrest going on, hence the IV. And I like to be a seller when the IV gets really high than a buyer, to be honest. Um, so that's what I got, guys, for you. These are the charts, and they're similar. Only this one has gone, you know, it hasn't paid enough to cover its decline. How about that? So that's what I got for you. I'd love to bring you these opportunities. Give me comments if you know of something else. I'm sure there's other income energy plays. I can't keep up with everything. I got to do more on the miners. I got a lot more single stock funds that I need to be covering in YieldMax. So I'm going to be very, very busy, guys, with doing different kinds of videos. Okay, guys, have a great week ahead. And this is Bruce saying this is not with targeted wealth creation. This is not financial advice. I'm not a financial advisor. Bye for now.